Sunday, June 21st, 2020. This is All About Your Benjamins and your weekly mixtape and weekend review video. Happy Father's Day to all the dads out there. We might hear a little bit of background noise. Silas is off camera celebrating Father's Day with me right now early this morning. But real quick, let's get to the headlines that may or may not be impacting your financial plan and portfolio. Just a few headlines that you're going to see on the blog. We're going to start off with some good news. In May, retail sales popped 18%. That's a record. So all of that pent-up demand from quarantine time, there's only so much shopping you can do online. So getting to go out to restaurants again, at least here in Indiana, having the opportunity to go into the stores and shop, we saw that that was a big increase in the month of May. So we'll see if that continues. We're starting to see some of the numbers with COVID creeping back up as states are opening. So we'll have to see whether or not that is going to be something that impacts the fall and may impact these sales numbers as well. The next few all centered around our good friends over at the Fed. First off, Fed Chairman Powell came out and just talked about the risk of long-term economic damage from COVID. And one of the things he highlighted I think is very important is the disparity between rich and poor. Basically, the wealth gap continues to grow. We have the stock market having recovered. We have people with a lot of money who continue to make a lot of money, and we see those on the other end of the spectrum who aren't as well off, suffering and harm. So we're seeing this gap between the rich and the poor grow and grow and grow. So that's one of the things he mentioned I thought was very interesting for the chairman to talk about. With this risk and the risk in the short term and the long term, they announced their program to start buying bonds kind of in an index style. So we heard about this earlier on this spring, we'll call it, that to help support the markets and the economy, the Fed was going to buy securities, and they're going to start dipping into buying bonds, corporate bonds that is. So not just U.S. bonds, but going into the corporate bonds. Some people who are a little skeptical of this start to say this is a slippery slope down to socialism and some other things. I don't know. I don't share that same thought process. I understand the argument they're making, but I'm also an optimistic person. I don't think that there is a grand plan to overthrow the U.S. Government and turn us into a socialistic program. So anyways, that is a good thing from the market's standpoint because there's the security of knowing there's the Fed put underneath the market, meaning that the Fed's going to step in ways that they can to support the market and the economy. They're really doing it for the economy, but the byproduct of that is the market recovers well because, again, the market is looking 6 to 12 months out. So if they know that there's going to be support to at least weather the storm and get us through this, then investors feel more confident about the long-term perspectives of the market. And then finally, going to talk about the markets still. There's an article in the Wall Street Journal that highlights retirees and the decisions that they're having to make right now with the markets being so volatile and the fear around what may happen. If we look back earlier in the spring, the 30% decline in just a few weeks spooks a lot of investors, especially retirees. Time horizons are thought to be shorter. I would challenge that as a retiree, you still have a good chance of having 30 years ahead of yourself. So portfolio construction may need to change. You may need to have more bonds and short-term things in the front end of your portfolio to live off of, but you're still going to need to invest for the long term. So that's the first thing I wanted to address when it comes to that. But it showed that there were a lot of retirees that sold and went to cash. Fidelity had a study, I forget the percentage, and I believe it's in this article that talks about how many retirees went all cash between February and May. We don't know the timing, we don't know anything else about the situation, but it was a lot of investors that sold at what looks like a bad potential timing, being at the bottom of the market, moving to cash, missing the recovery. So I bring this article just to continue to support the argument of being a long-term investor, having a financial plan, being well diversified, and putting yourself in a position to not allow your emotions to react to what's going on. It was scary, I get it, but you're better off sticking to the plan if you can afford to do so, and one of the best ways to do that is having that diversified portfolio. There are strategies you can have, a tactical strategy that may make you more conservative. That's what we use at my firm. So when things get trending down, some of the portfolio becomes more conservative to give us a little bit more of a conservative portfolio when things are a little bit shaky, and then when things get back to normal, it recovers with it. So long story short, the best thing to do when you're scared is probably not to sell. That's not recommendation, it's not advice, but talk to a professional when you're in that situation. Revisit your plan. Do you really need to be making that changes at the time, or are you in a position to be able to ride that storm through, get to the other side, then maybe have relook at your risk tolerance. We've talked about risk tolerance before. Risk tolerance is momentary. It's how you're feeling at that time. So you answer a questionnaire, you talk about it at one time, things change in life, in the markets, in the economy, your risk tolerance is totally different at that point. So it's always an ongoing conversation. Your plan will guide what type of risk you need to take. You've got to match that with how comfortable you are. So that's it for now. Silas is making me very nervous as he's standing on the chair. So we're going to wrap this up. I hope you have a great weekend. Happy Father's Day again to all the dads out there. Silas says Happy Father's Day. Thanks for watching. Be sure to subscribe and like. Head on over to allaboutyourbenjamins.com to catch all of the great blog posts from this week. And we will see you all in the next episode. Silas, can you tell everybody bye? Hey, you got to come over here. Say bye.